Britain's a very, very financialised economy, right? That Britain relies on finance and the finance sector probably more than most developed economies as a proportion. And that's been the case, pretty much certainly since the 1980s and the decline of Britain's manufacturing sector. And that kind of means a couple of things, or we need to have a couple of kind of starting points in that discussion. The first thing is that the relationship between the government and financial companies, the banks, but other forms of financial, other companies in that industry have a very close relationship. So there is a very close relationship between the government and the finance sector in this country. The second thing is that Britain is really not just a world leader in financial services, but it positions itself in that way. So the entire debate about Brexit, when it comes to thinking about the economic impacts, one of the few positive things that commentators will say economically about Britain is that it can entrench its position in financial services. Now, that's highly questionable for a number of complex reasons, but nonetheless, that is what's going on. Britain likes to talk about itself and position itself, and politicians try to support that as a leader in financial services. And these two things are a problem because the financial sector, we know, is particularly vulnerable to corruption and fraud. Okay, how do we know that? Well, I mean, there's almost a daily, certainly weekly diet of stories about the financial sector which are related to some form of fraud or malpractice or corruption. And if you think about just think about the banking sector, just think about the four big British banks. The charge sheet is incredible. Even if you just think about the last 10 years or so, we have a number of cases in which multi-million-dollar and multi-million-pound fines, totaling hundreds of millions, actually, have been imposed on all of the four major banks. I might run through, if you indulge me, I might run through some
Feel free
of
to
those,
do so.
because I've got just a very small part of the charge sheet here in front of me.
Feel free. I mean, they're not being spoken about anywhere else.
Yeah, I mean, look, they do kind of. I think, to be fair, some of these cases that I'm about to mention do come into media discussion every now and then. Mm-hmm. But then when they die off, and another case emerges, which is normally fairly quickly, another case of corruption in banking or fraud in banking or whatever it might be, the dots are not joined together. So we don't see this sector as being endemically corrupt. But let's see what we think about when I just list some of these cases. So, as I say, just the last 10 years, Lloyd's were fined $350 million for sanction busting in 2009. Barclays, almost $300 million for money laundering the year after. 2012, HSBC were fined $2 billion. That was a fairly widely reported case. $2 billion for money laundering in 2012. Lloyd's have been fined for PPI, $117 million in 2015. A number of other, Alliance and Leicester and a number of other financial institutions also fined for PPI. All of the major banks were involved in those dodgy practices related to selling protection insurance. Barclays, HSBC, Lloyd's and RBS were all fined hundreds of millions of dollars for their manipulation of the LIBOR, the London Interbank lending rate scandal, which was 2012 to 2014. Yeah. Those fines. The following year, you begin to see fines for actually very similar practice, fixing the foreign exchange rates. I don't know if you remember that. Again, Barclays, HSBC, Lloyd's, RBS, hundreds of millions for their involvement in Forex. And then a little bit more recently, 2016 to 2018, we saw a whole raft of fines for the manipulation of mortgage products, which partly precipitated the collapse of the economy in 2008. The global financial crash was partly related to dodgy mortgage products that were being sold on the back of the American housing market. We've got Barclays, HSBC and RBS, again, fined hundreds of millions of pounds for those. And maybe the most, I think the most recent was RBS, were fined about $4 billion last May. They've been fined a total of $10 billion in that case. Barclays, $2 billion. So very serious offences, very serious fines. You'll remember the HSBC, Swiss bank frauds, $300 million euro fine for that in 2017. So I could go on and on. Actually, I'm only halfway through the list here, halfway through the charge sheet. But what we have is systematic practices which are either fraudulent, unambiguously fraudulent, corrupt, or in some way trying to rig the market. And these are the four biggest British banks, household names, that are up to this on a routine basis. So what does that mean?
Yeah.
It means we have to think about corruption just in that one sector, and just in that part of the financial sector, in banking, as routine, as large scale, and as a real serious problem, because these practices threaten not just the economy, they also threaten the ability of the rest of us to use our earnings, use the money we earn at work properly. You know, when you fix the LIBOR rate, it affects every single one of our mortgages. We might not be able to see that, or credit cards, or the loans we get from payday lenders. Those rates are affected directly by those practices. We might not be able to measure it, but this has a real serious consequence for society. So when you have Transparency International and the Corruption Perceptions Index, and Britain coming relatively high in the world rankings as one of the least corrupt, we have to say that's complacency, because that's, as long as Transparency International have been measuring corruption, Britain has looked quite good. And for as long as that charge sheet has been going on, actually the banking sector has been looking like it's systematically corrupt. So there are big questions about how we measure corruption, big questions about how we deal with corruption in this country, and big questions about what the consequences are in social terms and in terms of how we lose out as ordinary taxpayers and ordinary wage earners and so on.